What's up? What's happening? Everybody willing to learn? What's up, gents? Thanks, guys. Yeah, no, it's a full sleeve now. Yeah. Alright guys, so today I'm going to teach you guys how to purge liquidity, but actually make it a trading strategy that I would say is at least 80. I'll be pushing it at 85% accurate. So I'm going to teach you guys something that is at least 80, pushing it to 85 accuracy. That means that you're going to get at least 8 out of 10 wins. At least 8 out of 10 wins. What this is also going to teach you is how to get your daily bias, or inner fractal and outer fractal structure bias. Also, what it's going to teach you is when to know and when not to know that a trend is actually over. So you won't be confused. You shouldn't be confused after this. You won't be confused after this. Once you understand how to tell that, listen, they've purged and they're about to move away and move further higher or lower, right? But also understanding the higher time frame and what that actually means, and how important it is to understand what the higher time frame is actually doing. You understand? Because it's almost like the soldiers. The soldiers push the work, right, to get the boss's attention. Who's the boss? The higher time frame. To get the boss's attention, so the boss now knows, okay, from the higher time frame, what is necessary, what is the work that needs to be put in order to push price lower or higher. The lower time frame, the soldiers are going to show us that. You understand? So one, I'm going to give you a strategy just using liquidity. You won't be confused after this on understanding what liquidity is going to be purged and why they're going to purge it. All right? Two, it's going to show you every type of way of understanding and getting the bias right. That's two. Three, it's going to teach you and give you an understanding of why a trend is no longer over. You might have thought it was over, but it's not over. And I'm going to just identify what you need to look for in order to get an understanding of why the trend is not over and why you should no longer trade either a bullish or a bearish trend cycle within perhaps a minor structure or major structure. All right. So, everybody ready to get into it? I'm gonna get myself something to drink. I think I need a water. I'm gonna be back. I want to understand that we're all on the same page, and that way I can go forward and start teaching you guys something new. I will switch comments off. All right, so let's go. Let's switch the comments off. Turn off the commenting. Comments are off. Let's get into the chart. And there we go. All right, so give me a second there. All right, so here we can see my chart. All right, there's my chart, right? So first thing we need to understand is, what is liquidity? What is this thing that resides in a market that is called liquidity? We need to understand what it is before I can teach you a concept, or rather a strategy that works using this. Because if you don't understand what it is, then how am I going to teach you something without an understanding? So I need you to understand what liquidity is. All right. So in order to understand liquidity, right, you need to understand that there's a buyer and a seller in a market. In any business, there has to be a buyer or a seller to make your money. All right, so we need to understand, right, that if there's a buyer in the market, right, and then there's a seller in the market, then obviously we call this a supply to demand or demand to supply. If you have what I need, you're going to supply me. If there's a demand for that, I'm going to need the supply. All right, simple as that. That is what we call, or this is how I give you an understanding of what liquidity is. So let's go to an example, right? Let's say at this level, we had a bunch of sellers, right? Price then came down and we got a bunch of buyers, right? Then all of a sudden price comes up, and what happens? The first bunch that tried to sell left orders at the top over here waiting to be generated into a market. It's like a slotting machine. You put money in, right? And then you push down the lever and then you wait for something to happen, right? Either they're going to take your money or you're going to take their money. But one is either going to win and one is either going to lose, right? So everybody at this level is selling off this market. They've got orders sitting at this level waiting for price to come up and then stop right at their orders, trigger their orders, and then start to sell the market off, right? So now you need to understand that the order sitting over here we call liquidity, we call money. You understand? They need, right? They need some kind of petrol. They need some kind of energy. They need to gather this energy somewhere in the market in order to push price lower. They need a fuel to push price lower. Where do they get this fuel? They get it from these guys over here. That's where they get their fuel from. They get it from these guys over here. Because if I come up and I take all your money that's sitting over here, do I not have enough money now to push the market lower? I do, but I needed to go get fuel, liquidity. I needed to go get their money before I could push price lower. And as I'm pushing price lower, I know now that there are also buyers over here. So why not kill two birds with one stone? Right? So we've got the seller sitting over here and the buyer sitting over here. Right? Because what happened was, soon as price came down, everybody believed, we're going to go and test this high. Right? Which price does. But then we have a fail enclosure and price pushes lower. So here, right, here we have the early, listen to that carefully, early sellers. Here, the buyers got in too early. This then creates money in the market that's just waiting to get taken. So what happens is, they come in, they take it, they come down, they take it. So now we've taken the sell side liquidity and we've also taken the buy side liquidity. Right? So there's two things we can do here. Right? It's either, right, we first take the sell side liquidity or we take the buy side liquidity. And as you can see over here, they took the buy side liquidity and then they took the sell side liquidity. Right. Now, how would I know that they were going to take the sell side liquidity after taking the buy side liquidity? Because normally price can just do something like that and range and then all of a sudden go higher. Right? But there was a confirmation for me, which I'm going to show you, that will then give you an understanding, right, on what to expect in regards to price and what price is actually doing. And I want to remove all these things. Just give me a second. Oh gosh. So understanding this is going to help you understand liquidity. Is going to help you understand what the buyers are doing, why they're doing this, right? Because I can't just do something without having some kind of outcome. I need to know that I'm doing this because I'm expecting an outcome. Right. So here on the 1 hour time frame, right, there was a conclusion that was made over here, right? There was a conclusion that was made over here. So if we look at this chart here quickly, right? Let's try to go into the screen a bit more. There we go. All right. So now it makes a bit more sense. There we go. Right. So over here, right, we can see that liquidity was generated. So as I said before, liquidity is generated right over there. Let's just turn that into a different color. So we can go here and put that into black, right? So like I said, liquidity is then generated over here, right? They come and they purge that liquidity. So they're done going higher, right? Why? Because we've now got liquidity sitting over here. So this is now where we get into a strategy. We're now going to get into a strategy to target this low. All right. So now that we understand liquidity, I can start teaching you guys a strategy to purge or understand which liquidity they're going to take next, right? So here was a low, right? So here was a low, right? But over here, there was also liquidity generated, right? So once they took this, we knew that it wasn't over, because after creating this, they would need to take that, right? And it's within the same region, so they're good to go, right? So what happens is price goes up, and then what happens is price takes that liquidity out, right? Takes all that money, and then price can then do whatever it wants to do thereafter, because it has completed its job. It has taken what it needed to be taken, which was money, which we call liquidity in the market. All right. So we took buy side liquidity, we took sell side liquidity. There was generated sell side liquidity, and that was taken once again. Right. Now, what we want to do, right, is wait for price to come in and take and purge the buy side liquidity or sell side liquidity. Either way, right, what we want to see is we want to see sell side or buy side liquidity taken. We won't know which way it's going to go until something like this takes place. Now, what this means is price came in, and as I said before, price then took those early sellers. Right? What happened was price then came up. Look at this candle over here. Price then came up and tried to take this high. So if you look at that high over there, right, you can see that that was a fail enclosure. They failed to break higher than this high, which was telling you that price is losing momentum, right? But they're not done purging. So we obviously knew that they're going to go and try test this high, because they need to take out these guys over here. Now, if we go back over here, right, and we had to, like, let's say, draw a line, right? So we had to say, okay, fine, let's draw a line from here. Let's move that over there, right? If we look carefully, they came in and they purged. They took out the early sellers, right? But you can see that they hadn't done purging, right? They hadn't done purging. Why? Why would I say, listen, they're not going to go lower yet? Why? Because over here, let's quickly open this up so everybody can see here. You can see that these guys over here failed to take out the high over here. So we had liquidity and then liquidity. Then price comes up. So just give me a second. Price comes up. And as price comes up, these guys over here get involved. And what do? They take out these guys. But now we have a problem. Because now we have what we call a sell side liquidity. Where is the sell side liquidity? It's sitting right over here. These guys came in and started to try buy the market. What does this tell you? This tells you, right, that they're not done purging. Why? Because there was liquidity, right? So what happened? What happened with the market? If you look very carefully, when we go back, you can see that they didn't come for this low. They came lower, right, in order to go higher. So they came in over here, but who did they take out? If we see over here, they took out the early buyers. Came down and created multiple wicks, which we once again call some kind of energy money, something that moves the market, we call liquidity. Then price comes up. What does it do? it then wicks. If we look carefully over here, you can see that massive wick over there to make sure that anybody who was trying to sell over here, had they stopped maybe over there, or over there, or over there, or over here, was taken out. This is telling you that the trend is about to change, right? The trend is about to change because they've taken everything they needed to take. They've taken all of this and these guys over here out. There was nothing more to be taken. There was nothing on the side over here. There was nothing over here. Nothing over here. They had done what they needed to do. This is now when we get involved to purge this liquidity, right? So not this liquidity, sorry, made a mistake, not that, because we've already taken that, right? We've already taken that. So we have liquidity sitting over here because obviously we can see over here that liquidity was not taken, but rather generated in order to take everything at one go, right? But we want to get involved over here. We want to get involved when they've trapped, when they have taken everything they need to take, and they are now ready to go and purge the lower liquidity, the sell side liquidity. So we want to get involved in this candle. So what I want you guys to start doing now, right, is you want to go to a 15-minute time frame, right? We want to go to a 15-minute time frame. So we want to take this candle over here. We want this 1 hour candle. That's all we want. We want nothing more. We want that 1 hour candle, and all we want is the wick. So once price came down, price started to go up, right? Now, when you can see that there is about 10 minutes before the 1 hour candle closes, how you can see, right, is price will always show you that over here. So over here, you can see, I'm going to mark it out quickly in a square and see if you guys can see that, right? Over here, you can see there is a blue, almost like a sticky tape, if you want to call it, not a sticky tape, but yes. Here you can see that price is obviously sitting at 15,128, right? Now, what you can also see over here is when the market opens, there is a timer telling you how long it's going to take before the next candle opens. All right. So this is going to show you when the next candle is about to open. All right. This is going to show you when the next candle is about to open, right? So now, right, let's pretend, right, that this hasn't happened yet. So all of this has not happened yet. None of this on the side has happened yet. So we basically have nothing there, right? But what we are targeting is this low, right? And once we break that low, we can then target further liquidity that is obviously going to be then taken. But what we want to cover right now is that low, right? So this could be a day, this could be 5-6 hours of trading, but it is profitable. I promise you that. Big money will be made. That I can promise you, right? If, and only if you understand this, right? So now we want to target that liquidity, right? So we want to go and target the last 10 minutes of this candle. The last 10, between 10 and 15 minutes, up to you. Between 10 and 15 minutes, you want to try target that wick. You want to get into that wick. So what we do is we go down to a 15-minute time frame, right? Now, obviously, within the 15-minute time frame, right, we want to see them purge, right? So what did they do? You see this liquidity sitting over here? They took it. This liquidity sitting over here? They took it. But now, what I want you to understand is that within that 10 minutes, we're going to see something like this, where price quickly, right, comes in and purges that high, right? Price comes in, if you can see over there clearly, you can see over there, price comes in and they take that high. They take that liquidity. This is telling you that they're done. There's nothing more to the side, not to the left, nor to the right. They are done. We are now going to target, right? We are now going to target the low, right? So now, right, we're going to wait for the 15-minute candle to get to 5 minutes. The 5-minute candle is now closing within 5 minutes. The 15-minute candle is now going to close within 5 minutes. We are then going to jump to a 5-minute time frame, right? Within that 5-minute time frame, right? What do we want to see? We want to see a break of structure, a change of character. Do we get it? Yes, we do. We get it right over here, right? So over here, you can see they take that liquidity, they purge that liquidity, and what happens is we then get a change of character, right? This is now telling me that the trend is over and we can now start to purge, right? We can now start to purge the low. So now we are getting involved at any of the highs. You can get involved at any of these highs. These highs are going to be liquidity, but they're going to be liquidity once they take out the lows. So we're okay, right? So what we're going to do is we're then going to get involved anywhere here. The first high, you can see that not once did price go higher than any of these highs. Price stayed there. It was consistent because why? It did what it needed to do. Price is now going to fall, right? If anything, you might get a 10, if even 10.5 point drawdown, right? But as you can see now, if we had to go back to our 1 hour time frame, we would now be purging that low, right? And now you can see that we got involved over here. We were not supposed to get involved over there. We were supposed to get involved at these wicks. So let's do that again. Over here, we're not supposed to get involved over here. We're supposed to get involved over here. This is where we're getting involved. We're not getting involved over there. So that was wrong. So let's go back to our 15-minute time frame within there, right? Okay, great. So we there. Let's go into the 5-minute time frame within that box. Great. There's our change of character. Same thing happens. Nothing comes higher than this, right? So there's our change of character, right? Within that box, here's our change of character. It takes place right over here. So there's our change of character. We can then get involved as soon as price comes up. So we can then get involved over here. We can get one position in over here, or maybe 5 positions like myself. Get in 5 over here. Get in another 5 over there, because I know price is not going to purge that. Because why? They're going for the low. Get in over here. And then start to sell off. So on myself, I might have 25,000 and I'll be getting 5 positions in at each of those points. And I will be targeting that low. And as you can see, price comes down and we hit our take profit, which is this low. So that is the strategy. It works. And once you understand this, believe you me, it's going to bring you lots and lots of money. Right? And this is just a strategy on liquidity. Right? So I'm going to put the comments on and just see who understands it. and let's see what's going on. All right, let me turn on the comments, and here we go. Everybody understand? Yeah, guys, if you got in late, then I don't know what to do. And guys, what you can do is you can even target bigger liquidity. So you can target a 4 hour. You don't only have to target a 1 hour. I prefer 1 hour because that's like scalping on my side. You understand? I prefer 1 hour because that's scalping on my side, right? But it doesn't have to be like that, right? I can go and target, right? I can go and target a 4 hour chart. I can go and target a 4 hour candle. I can go and target this, right? As you can see over here, we did the same thing, right? So I can target this 4 hour candle. And what am I targeting now? I'm targeting the 4 hour low. So you see, things get bigger. So on the 1 hour, we targeted the 1 hour low, right? But over here, right, we can also see that there is a lot of liquidity sitting over here. So you can then target this low, right? You can then target this low. Same thing. You can go into a 4 hour candle. You can even go into a 1 minute time frame, right? And you can get in at a change of character. That's all you're looking for. So over here, you can see price. I'm just going to show you something. So over here, price brings in a change of character on the 1 minute. Like I said, 5 minutes, 1 minute, up to you, honestly speaking, right? Then you want to get in when price tries to tap into that level or gives you your first low and then a high. So price comes in, price comes down, and price then goes up. You would then get involved over here, right? So you could get involved over here. And then if we go back to our 4 hour candle, you would then obviously see where we are getting involved. And on the 4 hour candle, we would have gotten involved right over there. That is where we would have gotten involved. And if we're getting involved, we are then going to then target this low sitting at this level, or perhaps after taking out this low, we would then get into taking out that low after securing profits, right? So for now, I know that I am going to target the liquidity, right? Because if I look over here, I have taken what needed to be taken, right? If we take away this box, for me, price is going lower. Why? Because they've purged, right? So if we look over here, there were orders sitting at this level, right? Over here. There were orders sitting at this level, right? There were orders sitting at that level, right? And then there were orders now sitting at this level, right? Because there they failed to take out the orders that were sitting to their right-hand side, right? Or rather, yes, their left-hand side, sorry, right? So on my left-hand side, you can see that at that level, right? At that level, we purged, right? But we failed, right? So what does this do? This gives us something called equal highs. Equal highs. And what happens when a market gives equal highs? It's trying to show you that the trend is about to change. It's trying to show you that, listen, there's going to be one more purge, and then the market is going to then fall. Right? You then know that price is then going to fall. So what do? Right? What do? You get involved after they've purged. So here on the 4-hour time frame, look at what happens over here. Price goes up. So price pushes up, tries to take this liquidity, right? Tries to take that liquidity, but fails. Right? Fails. Which is telling you now that the buyers are starting to fail. The momentum within the buying power is failing. Right? So what is this telling you? This is telling you that they're going to try and do it, right? Because what do they want to do? They want to take that. They want to take that, right? Because here they failed. So if they failed over here, right? At that wick over there, if they failed over there, they're going to try to take this one. They're going to definitely try to take that. Right? So once they fail, right, this is telling you that the buyers are failing. Right? This is telling you that the buyers are failing to push price higher. So what are they going to do? They're going to go and grab that last high. Right? And then this high. So price goes up, and it takes that high, price comes up, right? They generate liquidity, so then they take that high, right? If I then go to a 1 minute time frame and I get a change of character, right? That is telling me that the minor trend has changed from bullish to bearish, which means that the minor trend is going to follow through with my setup, which I believe is them taking out the sell side liquidity. So a change of character gives me that confirmation that, listen guys, the buying power is over. It's time to start selling the market. Does everybody understand? And guys, that is all it is. It is money being generated and money being taken. Someone is a buyer and someone is a seller. Someone is winning and someone is losing. It's just like going to a casino. It's either you winning the casino over or the casino's winning you over. But someone is winning and someone is losing. And that's all you want to see. Someone winning, someone losing. If the price comes up, right? If price comes up to this level, right? And it takes out these guys, but these guys get lucky and these guys get involved and these guys know that price is going to come to this low, then these guys win the market over because price then comes to your level in which you said price would come to, right? Unfortunately for these guys, price takes them out. So if you were a buyer there, price took you out, you got in too early, try again another time. However, though, those who got in at that next high, when the purge was already over, right, would then secure the bag and get involved at that low, and they would then win. So one is winning and one is losing. One is giving back to the market and one is taking from the market. That is manipulation, inducement, in whatever you want to call it. right? But that's what they do. So they generate all this liquidity. Let me explain it to you again, right? So they generate all these highs and lows and highs and lows, right? So they generate these levels, right? So here price makes a low. It then goes for the high. Price then comes down and we generate a low. We can also call this an ABC pattern, which I am not going to get into right now, but again, a very profitable session that takes place where you can make a lot of money if you are a swing trader, right? So the reason I know that this trend is not over is because once you understand ABC and its patterning and understanding what's happening over here, we then want to see C get taken out and so forth and so forth. So obviously I know price is still going higher. It has not stopped or it is not done going higher, and we will not see it go any lower before going higher. And for what I'm looking for, right, I'm looking for something that is going to show me that price is no longer going higher. This is the end of a major, right, price rejection. And we will then start seeing a declining in that same price rejection. So price is rejecting buyers, and we will then start seeing sellers coming in, right? But because this is on such a higher time frame and we see this type of pattern play out, we then know that long term, the sellers are starting to come in, right? And the buyers have stopped to climb higher in price. They have decided that, listen, we're stopping to buy price at this level, right? We are now going to go for a discounted level within price, and that's why price starts to go lower. Now on the time frame like this, when you're starting to now stretch it and you're starting to then get involved in regards to bigger liquidity levels, we start going to those type of lows and perhaps even going lower, right? Until they give us the same confirmation up here, down here. So if they don't give me that confirmation, I know that they're going to obviously continue to sell. So what do? I then target the next liquidity. All right. Now, obviously, that is in the mentorship. I'm not going to share that with you. What I am going to share with you is though this strategy. So obviously that confirmation and what you look for is all in the mentorship. And that just helps you obviously to then swing your trades and obviously make bigger gain in profits and obviously help you take your trading to the next level. If you want to be a swinger or whatever it is that you want to be, whether you want to be a swinger, whether you want to just be a intraday trader, whether you want to be a scalper. But what this helps you understand is what we are targeting. You understand? What we are targeting. And as we target, you must understand, as we target certain levels of liquidity, right? You want to understand, right? You want to understand that when we target these, we take partial returns, if you want to call it that. So we take a little, and we continue to let that trade continue to fall, right? So as we make a bit of money, we take a bit of money. As we make a bit of money, we take a bit of money. So we don't lose the money. You with me? Right? So we don't lose the money. So what you want to do is you want to understand that, listen, in order to not lose the money and continue to give the money back to the market every time it gives you money, right? Take the money and put it away. Because you already know, like if I know, right? If I know that price is going to come to this level, right?
I know, okay, fine, price is going to come down to this level, and I am secure in that perhaps there's an FDG, an imbalance, an insufficiency, whatever the case is, as we see over here. Perhaps maybe price is coming into this order block, and we'll get into that obviously another time, or rather should I say, when you are within the mentorship, you will then understand an order block and what it is and how we use it to obviously better our trading. But obviously price then comes into this order block, but as I see that there is insufficiency below that, right, this order block would probably not hold. We would then use this level as an inducement, right? So price would then induce people to buy in there, thinking that there would be maybe a trend line sitting over here. Price comes into that trend line. So obviously we have a trend line sitting maybe somewhere over here, and price is now coming into that trend line, and everybody believes that price is going to go higher. Price then induces everybody who's sitting at this level and comes lower. Why? Because there is an insufficiency below that. I don't know what I did, but there is an insufficiency below that, and price will then fail the first insufficiency and go to its main insufficiency. And if you don't understand that, then you clearly need a mentorship. Otherwise, yeah, that's basically how this market operates. And this is obviously how we generate liquidity, and this is obviously how we, target liquidity in regards to making money. So yeah, I think I'm done. It was really quick, and you should definitely have you could say that it's the same as, let's say, since someone's saying that there wasn't a trend line, let's say there was a trend line from here to here to here, right? So this was obviously your first touch. Price goes up, touches, comes down, comes to your trend line, touches, comes down, comes to your trend line, comes down, and then price goes higher, right? I'm just making an example here. I'm not bashing trend line traders. I'm just saying that in most cases, it's for people who are trend line traders. It's for people who are getting too early into the market or too late into the market or whatever. But at the end of the day, you guys get induced into a market into believing that the third touch is going to fall, and price doesn't fall and price goes higher. And then you look for that breakout, and then price comes down and takes you out, and then price goes higher. It's just the way it is. These are targeted for retail traders, and retail traders are trend line traders, and retail traders are people who are learning to just trade, and they have learned to buy low and buy low and sell high, right? But what happens if you are selling low, right? Because you were told to sell low, right? So you sell low, and then price comes up and takes you out. Then you're like, but I sold low, right? I sold low, but price still took me out, right? I sold high, right? Everybody's teaching me to sell at my level of resistance. I sold here, price took me out. What's happening? It's just the way the market works. It's just the way the market works, right? Price is going to generate. So when you understand liquidity, you would understand that price is generating liquidity at that level in order to take that liquidity out. Why? Because they had done what they had to come do at this level. There was liquidity sitting at this level. Once again, liquidity sitting at that level, price comes down, takes out that level. So obviously we know they're going to go and purge the high. So if you were buying high and trying to gain, you should understand liquidity and understand that at this level, liquidity is being generated, right? Because they've done what they've had to come do at the bottom. So now they're going to go and generate what they need to generate at the high. Does everybody understand? Do we all understand? So understanding what liquidity is will help you understand why they won't go to a certain order block, if that makes sense. If there is liquidity sitting above an order block, that order block unfortunately will not hold. Whether it was mitigated or not mitigated, that order block would not hold. There's something unfortunately a bit more powerful sitting above that. And it's the same as if there is an insufficiency above an order block. Insufficiency is liquidity. So this is how you know which order block is going to hold and which order block is not going to hold. And you might come and say, oh my God, but that order block was not mitigated. Yes, it wasn't mitigated, 100%. But they will mitigate it once they go to their destination, which is money, which is the liquidity. So if there's a liquidity sitting above an order block or there is an insufficiency sitting above an order block, do not expect the order block to hold. All right. Or you can expect the order block to hold for maybe an hour or two, and then price will probably break right through that. All right. Because they just needed energy, collect energy, and then push price right up to go and collect more energy, more money. Does everybody understand? I would say you could start looking for liquidity build up in the London session. So if you understand liquidity, it is the most important thing. If you can understand liquidity, it is the most important thing. You really don't need much. Yeah, you need a few concepts here and there and a bit of an understanding here and there. But once you understand liquidity, once you actually understand liquidity, you will understand whether they're going higher or lower. You will know when they're going higher or lower. You understand? Just from the strategy I taught you guys now. You don't need this and breaker structures and this and order blocks. I didn't mention any of that. You don't need FVGs. You don't need fair value gaps. You don't need insufficiency. You don't need anything. You just need to understand purging. Purging liquidity. Purging taking money from early buyers or early sellers. Stop orders sitting at these levels that need to be triggered. You understanding that alone, you've got an edge over the market. You understand? You understanding that alone gives you an edge over the market. I promise you. You just understanding liquidity
gives you an edge over the market. So if you were in this session and you understood what I was talking about, then congratulations, I see you making money. You understand? You understand that you don't need much to make money. You just need to understand what they are targeting. So once you understand, right, the root to all evil is money, then you'll understand why they manipulate you. You get me? You'll understand why they do bad things in a market. You'll understand why brokers manipulate you. You'll understand why they open spreads. It's the root to all evil. It's money. We call that liquidity. It is the evil in the market. It is the evil in the world that unfortunately runs things. And again, it runs the same markets you're trading. So once you understand how to make that a win on your side, you pretty much got the markets by its balls. You get me? Once you understand where these guys are going, where they're taking their money to, you've got them by their balls. That's all you need to understand. You need to understand, right? You need to understand that once you understand where they're going, and once they're done going there, where they're going to go next, you've got them by the balls. So, simple as that. But it is the root to all evil. The market is evil and the world is evil because of money. Yeah, Sasha is my strategy that has like a 99% win rate, or 90. Okay, let's push it to 90. I believe it has like a 95% win rate over this market. But unfortunately, Sasha is only in the mentorship. I cannot give it out to anybody. And it's not on YouTube. It's not anywhere, because in my mentorship, you can't record. I've coded it, so you can't record. Hence my mentorship can't be leaked. Hence Sasha can't be leaked. Well, Sasha could be leaked if someone did their own video in regards to that. But nobody's going to give you Sasha, because if the market had to get hold of Sasha as my strategy, and they had to then start manipulating that, we don't want that. So nobody's going to give you Sasha. Because if everybody got Sasha, we would have a problem. Because Sasha is a beast. She's a butterfly. When she takes, we call her a butterfly. We call her the butterfly because when she takes off, she slowly glides. She just takes off. That was the reason I called her the butterfly, because she took off. Like she just went from one level to the skies. So that's what we call this Sasha. Well, Sasha being my other name, but she is the butterfly. So yeah. Well, I'm not promoting myself. I didn't say anybody should join my mentorship. I'm just saying that Sasha is taught in the mentorship. So I'm not promoting anything, Mr. FX Buzz. I'm reading the comments. Did I mentor Menando? Did I mentor Menando? I did. I mentored him. I mean, yeah, because the reason he gets the entries he gets is because of me and what I obviously taught him. So, hey, I did. I actually mentored Menando. Didn't think about it like that, but yeah, I taught him. I mentored him. I mentored him. Yeah, I mentored him. What is Sasha? Sasha is a strategy that is about 95% profitable. And once you get the whole criteria into play and everything starts to play out and we have at least 3, if we have 4 confirmations, it's a guaranteed win. If we have 3, I would say we probably have about a 95% win on that trade. But yeah, once we get that 3rd confirmation, or we get the 3rd confirmation and the 4th confirmation, then yeah, then it's a win-win. It's a win all the way. But anyway, yeah. Yeah, no, my net worth is insane right now. Sasha is my bread. I would say Sasha gives me 100% win rate when all confirmations are looked at. Sasha is basically the tip on the iceberg in his mentorship. Once you understand Sasha, it is game over. Interesting. Yeah, but agree 100%. New tattoo. Yeah, it's a new sleeve. It's nice. coming. I still need some touch-ups, but it's coming through, man. And look at that. My tattoo artist is here. JP? Tattoo artist, guys. That's the guy who did my sleeve. Going for some touch-ups soon. But that's the guy who did my sleeve, man. JP Tattoo Artist. If you want some really good work done, he's the one who did my sleeve. And as you can see, job fucking well done. Where is my Rolex? I'm wearing a Cartier. And I've got my Cartier bracelet on. Yeah. So, this is silver. It's weird how this is silver, but this is white gold. Weird, but they look the same. Does Sasha work on NASDAQ only? No. Sasha works on everything. It's just something that I put together that works in all markets. Gold. The one guy did so well with Sasha in gold last week. I was actually jealous. But, yeah. So... yeah, he did really well. Sasha plays out quite well in gold. I was quite impressed. All currency, all pairs, all everything. Everything Sasha dominates. Anyway, what was I going to say? Okay, but did everybody get, understand what I was taught? What I was trying to teach? Did everybody understand what I taught and understand why certain order blocks were in hold, understand how this also shows you order flow, understand how this also shows you the end of the trend, I taught a lot today. I really did. In just that 35 minutes, I taught you guys a strategy. I taught you guys how to see order flow. I taught you guys how to see liquidity, right? I taught you guys how to understand when a trend is then over, right? And I taught you guys how to understand a bias. All in 35 minutes. Not bad, eh? Not bad. So, yeah. We need order flow. Okay, what is order flow? Let's say I had to ask, what is order flow? Let's see. Let's see if people even understand what it is. What is order flow? I'm trying to get someone to tell me what is order flow. What is order flow? Would everybody agree with this? Okay, so I agree with that. Now, what is a bias? Marco, can you please explain to us how can we see lows and highs? Okay. I could do that. Let me just get this computer on. Let's see if I can do that quickly for you. Let's see if I can do that quickly for you. Give me a second. All right. That's actually a rather good question. How do we differentiate between highs and lows? Okay. All right. I like that. I like that, and I will show that. Why is it going off? Come on, man. Why are you turning off? Don't turn off. Stay on. The hell. Okay, so all right, let me quickly do this then. Let's go to settings. I'm just going to quickly show that. I feel like that is very valid. Very valid indeed. I like that. I'm going to show you that. I'm going to show you how to see cancel. All right, so let's go in here. Right, so that was a very, very good question. How do we differentiate between highs and lows? Good question. Let's go into it. All right, so this is the last one, guys. This is the last one. I'm done after this, eh? I'm done. Okay, so
there's really a simple strategy to this. A really simple strategy to this, right? So, honestly speaking, in regards to actual structure in the market, you want to see two consistent highs, right? But not major highs, but rather minor highs, right? So you want to see something like this, where price makes a high, and once again, it comes back to liquidity, takes out that high, right? Because once it's taken out the high, it's going to go for the low. And that's going to show you where they're now creating the next low. You hear me? So this over here, people would have been like, but this is a low. And unfortunately, it's not a low. So this over here, we would not consider a low. Instead, this would be an inducement for early buyers to get involved and then taken out, right? So our low, however, though, right, would then be created once again after such is taken place. So over here, right, they purge and they then come down, which then creates this low. So this is then the low, and that is then the high, which means that this is then the low, right? Because they're obviously going to go and create a new high. So highs and lows are actually pretty easy to see. So you just want to see a high generated and then another high generated thereafter. Because if there's just a high, price hasn't created a high. I don't know if this makes sense. So let's try to make this make sense to you. If there is a high that was created, right? So if you look over here, right? Everybody would say this was a low, right? So we would all say price went up, created this high, and then price came down, created this low, price then went up, and then price went down, right? But you see, here they purged liquidity, right? So they were done going higher, right? But they were not done purging. So let me explain it to you. They were done going higher, but they were not done purging. Now let's pretend that none of this was here. So let's say we look at the chart over there. None of this was here, right? But if we look over here, right? If we look over here, you can see that they generated this liquidity, and then price comes up and then liquidates that liquidity, right? And then remember now that this is where we at within price, right? So obviously, right, if price made a high, they need to come take out the low. They need to come take out this liquidity, right? So we obviously know now they're going to create a new low. So in the beginning, I obviously showed you guys and taught you guys how to get this low and how to get involved in, liquidating that low and making that your point of interest. So as you can see, price then comes down and we then create a new low. So over here, we then create a new low, right? Because we then purge the previous low. So here is another low that purged the previous low. So as we continue going up now, we know that they're done taking out the low. They obviously want to now go take out the high. So what do is we get involved at that low that we just created, and we go and purge the liquidity at the high. So this is how we differentiate the highs and the lows. Right? And as you can see, price then goes up and we purge that high. Right? But we only purge it, right, after creating two consistent highs. Right? Because there needs to be enough fuel there for price to go higher. Right? Because there was enough fuel here to go lower. So they were done going lower, so they would then go higher. Now, we can't say how high they're going to go. But what we can do is take fractal returns. So we could then say, okay, fine, so price came to this level. Is there any reason for us to start selling off? No. Why? Because then all of a sudden there is a lot of bullish momentum. Price shoots up. Big candlestick over here. Price is starting to show that the buyers are in charge. So what happens is we're now looking for that rejection. We're looking for them to liquidate or to at least trap the sellers. Do we get a trap? No, we don't. So because we're not getting traps, this means that they're still going higher. So here we don't get a trap. Here we don't get a trap. Here we don't get a trap. And now we're waiting to see if there is a trap over here. So what I'm expecting now is for price to come in, trap the buyers, which they have done. So okay, you can't see my screen anyway. Sorry about that. Okay, anyway. There, right? So obviously here you can see that we have now failed to trap by sellers, trap sellers. We haven't trapped sellers yet. So this is telling us that they're still buying. Right? They're still buying. And this is a 4-hour time frame. So on the 4-hour time frame now, right, we could see that they trapped sellers. But over here, they trapped buyers. Right? So now we look at point of interest. We look at a higher time frame. We look at, is there anything more powerful up ahead of us than below us? Right? So we go to a daily time frame and we start looking at, is there anything above us? Well, yes. There's liquidity. Funny enough though, not once at that level have they trapped the buyers. So if you look over here, there's still this liquidity sitting at the top over here. Right? There's still liquidity sitting at the top over there. They trapped them over here, but didn't trap them at that high. So we now know that should price go and purge the low, let's say they come down to this low, right? Maybe come into some kind of order block sitting over at that level, and then price will then go higher. Now, if they're coming to this level, this now shows you that this could be their point of interest. Why? Because they are trapping. They are now trapping the buyers. Those who thought price would go higher bought, price sold. Soon as price came into this level, they bought, hoping that price would then continue bullish. What happens? Price then comes and starts to crumble. And what we're looking for is an entry into this move on a lower time frame. Right? Because now, on the daily, we call this a double high. Right? Or we call it liquidity. Lots of liquidity sitting at that level. So once price is done trapping, whoever they need to trap, maybe over here at this bottom. Sorry. Oh, gosh. Right? Maybe once they're done trapping who they needed to trap down here. So let's say price continues going lower. They can then start making their way higher. And that's now how we differentiate highs and lows, basically. And Bobby's your uncle, yeah. Michael, why did you reject a house and cars from brokers? Do I not have a penthouse? Do I not have cars? Do I really need another house? Do I need another car? Plus, if they got me involved, it was getting me involved to get you guys to lose so they make money. Imagine that. Crazy, right? Because honestly, that's what brokers do. I'm going to be honest.
They get their people involved to give you shitty signals so that you blow accounts, so that they make money. So on a certain day, news event, they open up their spreads, you lose money way quicker than you could even think about. I don't even need to give a really bad signal. I can literally give a buy and then it can sell and take you out of the market and then done. I'm using FX Pro. What is the best broker? For me, I'm happy with FX Pro. But I don't know. I'm not going to mention brokers because I don't want to get you guys, having conflict with me because, oh, Marco, you said this broker is good. That broker is good for me. I'm not going to mention other brokers. My broker is FX Pro. That's my broker, my personal broker. Whatever you guys want to use, that's on you. That's fine. I'll save this live for the next 24 hours. You trained Ellie well. Obviously, I had to. I had to train Michael well too. Otherwise, imagine having people teaching my mentorship and not even knowing what's going on. They have to know what's going on. I needed to train them well. The thing is that what people don't understand is sooner or later, I'm not going to be teaching in a mentorship. I might only give one class per advanced, per beginners, per intermediate, or whatever the case is. But at least I know that the people that I have in place will still teach you exactly all I know and all I've taught them, and I've taught them everything. There's nothing I've held back from Ellie nor Michael. They know everything. So, yeah. Who are those people? They are my mentors. They are the guys who teach the people in my mentorship. They are the guys who teach you guys how to trade, because obviously I've taught them how to trade and they know everything I know. So some of them even teach it better than I teach it. Yes, I might be a better trader, but they still teach it better than I teach it. So, yeah. All right. Anyway, guys, I'm going to be out. I hope you guys all learned. You took notes. You understood what I was teaching. And if obviously you want more knowledge, better understanding, and you want to just better your trading, then join the mentorship. If not, you can still use what I taught you here, absolutely free, and still make money from it. You'll just get a better understanding within the mentorship. But if you're already, used to trading and you're not a beginner, you should be able to grasp this, and make it work. And you should be able to definitely better your gains within a few weeks. If not, the mentorship is available, and you can just hit me, Ali, or whoever up, me, Michael, Ali up, and we'll then send you the payment link to join. However, though, this mentorship is done. The next mentorship will only begin in July, and any details, whatever you want, you can hit me up. And guys, I'm gonna say this again. If you are talking to me on this Instagram, on this one, Marco the Entrepreneur, not Marco ... entrepreneur, not Michael / ... entrepreneur, no. It's Marco the entrepreneur, no dot. Right? So understand and differentiate who is the real person. Again, you can ask me to send a voice note, and I will send a voice note, right, with whatever information you've asked of me, right, to obviously prove that it is me, because I would like you guys to get solid proof that you are speaking to the real Marco, because there are a lot of scammers out there. There's guys hitting me up telling me, Marco, you took my money, and I'm like, what? And then they show me a screenshot of the person they were talking to, and I'm like, but that's not me. Unfortunately, that's not me, though there are a lot of scammers out there who are pretending to be me, who are just going to take your money and run away. But if you're speaking to the real Ali, there are some fake Ali accounts now coming through. But if you are speaking to the real Ali, and you are speaking to the real Michael, and you are speaking to the real me, you will get what you want. We are not a bunch of scammers. So, however though, if you're not speaking to me, do not hit me up and say I scammed you, because you are speaking to a scammer. And I've told you that if it's not Marco the Entrepreneur with Marco the entrepreneur, nothing after that, it's this account. If you're speaking to another account, it is not me. I have one account. And try not to speak to me on Telegram, because I see a lot of scammers out there too. Right?